In this video, I'm going to give you the brutal and inconvenient truth about VC funding. If you're trying to raise funding for your startup, especially early stage funding, you need to listen to this. But I'm always going to try to tell you the truth, even if it's a little bit risky. And this is specifically for VC funding. If you're trying to raise funding from any one of these logos here, these VC firms, this is specifically for you. It does not apply if you're trying to raise friends, family, and associate funding, as well as angel funding. This is specifically for VC funding. You've been warned. Before we continue, my name is Ed Kang. If we met before, use the chapter markers to skip right ahead to the good parts of the video. If we have not met before, welcome to my channel. Thanks for stopping by. I'm a 7-time funded founder with 2 exits. And that's just a fancy way of saying I failed a bunch of times to your benefit, because I use YouTube videos like this and my channel to try and help founders, especially early stage founders, avoid some of the catastrophic mistakes that I've made, especially fundraising. I'm also the Chief Strategy Officer for Startups.com. If you haven't checked out Startups.com yet, head on over there. A lot of free resources for you. I'll show you in just a minute. Do me a favor, do the YouTube thing, like, comment, subscribe. I'd love to hear what you think. If you're already part of the Startups.com community, thank you very much. Let's jump into telling you the truth about VC funding. VC funding will be the easiest funding you ever raise. The challenge is getting there. And I get it. I've been in your shoes before. If you're trying to raise VC funding 7 times, I've gone around hundreds of presentations, thousands of conversations in terms of outreach to have so many rejections. Yet the truth is, and it's brutal and inconvenient, VC funding will be the easiest funding you ever raise, the easiest check you will ever get. Now, you might be thinking right away, Ed, that makes no sense whatsoever. You're nuts. You just told us getting to VC funding is the challenge, yet it's the easiest check that you're ever going to get. Let me explain to you. A VC wants to give you their money. If you are the right founder and you fit into their investment thesis, they need to give you their money. A lot of founders think, oh man, VCs are just playing games with me. They don't really want to fund me. That's precisely the opposite. VCs have LPs. They're called limited partners. And the LPs look at the VCs or the general partners, the managing partner, and say, where are you putting my money into hyper-growth startups that are going to go unicorn and give me that asymmetric upside that's legendary? The truth is, VCs can't afford to sit on their funding. If they've raised a round and they have a fund and it just sits there, well, the LP is going to say, I could have put it into the general markets, the NASDAQ, and made whatever, 10, 11, 14% over the past few years. I'm looking for those 50x, 100x returns in startups. That's why I gave you my money. Think about all those stories that you read in TechCrunch where it's these founders, they're suddenly being thrown cash by all these investors because it's a frothy environment and they're sitting on a rocket ship, a unicorn, just ready to go to the moon. VCs have FOMO and they're fueled by greed and they just start putting in all the money. Now, let me give you evidence of this. There's so many funding rounds happening for AI companies right now by investors who couldn't get into OpenAI or Anthropic or some of these other really big deals. So now they're just funding everybody doing AI stuff. And those are the stories that every founder is hearing. And they're thinking, well, why doesn't that happen to me? The question I know you're asking then is, how do I make it the easiest funding that I will ever receive? Well, I'm going to explain this to you. Let me tell you a story. This is Muhammad Ali. I sold one of my startups to an agency that had the Muhammad Ali Center in Louisville, Kentucky as a client. Therefore, I went to go work for Muhammad Ali Center, and during a few years, I was Muhammad Ali on social media. When he appeared in the London Olympics, I was on Twitter, I was on Facebook, and so if you got a comment from Muhammad Ali or Muhammad Ali liked your comment, that was me pressing the buttons. It's a little bit of a secret in the industry because, well, look at me. A lot of people question on whether I could represent Muhammad Ali on social media, but I used my startup technology, and we did really well. If you go look at Muhammad Ali's socials right now, especially on Facebook, we grew that page from under 1 million to what it is now. It was over 10 million by the time I was finished with it. During that time, for Muhammad Ali, we created a marketing slogan that said, be great and do great things. That was something that we wanted to make as sort of a rallying cry for everybody out there saying, you can be as great as Muhammad Ali. He was known for going out there saying, I am the greatest. I am the greatest of all time. That's where we get this meme called the GOAT. You're goated, the greatest of all time. That came from Muhammad Ali. Now, I was a big Muhammad Ali fan, but when I got to know what his campaign was all about in his organization, he wanted to inspire athletes all around the world to be great and do great things, to inspire them and say, you can do that. Don't be discouraged. And it's the same thing that I say to every founder. Every founder has a better better than 0% chance of getting VC funding as well as building that unicorn. It's the stuff dreams are made of. Every founder has a chance to be great and do great things. You need to remember this. And that's what VCs are looking for. They're looking for great companies by great founders working on really great problems and showing a lot of traction to prove their greatness. If you are a great founder and you can show them you're a great founder, that will be the easiest check that you ever raise. But like I said, getting there is extremely difficult, and we want to break that down. Here are the 3 things that you must do to put VC on easy mode. The first is be great. That's all you got to do is be great. Like I said, easier said than done. But what does being great mean? Well, that entails domain expertise. And by domain expertise, I mean that you are immersed in your industry. You are experiencing founder market fit. You're proving it out because you're so close to the problem, and you can go out and talk to people, and VCs know that you're connected to your market. Now, some founders show this domain expertise by already being funded and having a big exit. That's probably in the top 1% of fundable founders. Most likely, that's not you. It's definitely not me. If it was you, you're probably not watching this video. For the rest of us 99%ers, we can show domain expertise by working in the industry, getting industry recognition, and immersing ourselves in the problem, like I talked about, gathering that domain expertise. But what VCs are looking for is how far you will go to do everything it takes to become that domain expert. You don't have to have graduated with a fancy degree. You don't need an Ivy League background. It really drives me nuts when founders tell me all the time, oh yeah, all you need to do to get VC funding is know somebody or have this Ivy League, have this privilege. And it's just not the case, because I know many founders who got kicked out of schools, who don't have the same pedigree, don't have any connections, and they're funded and they're building unicorns. Another way to show that greatness is to exemplify that through other things that you've done. I one time had a co-founder who was a 2-time Olympic athlete. That was domain expertise in terms of what it took to be a formidable founder. Another way is to recruit other founders. If you are a non-technical founder, you can demonstrate domain expertise by recruiting technical founders who are much smarter than you because they understand that you understand the problem. Maybe you've got an inside track or a hack, or you're really trenched in the industry and you've got all the connections needed to make that startup successful where that technical founder does not. It might be advisors. Maybe you've impressed an advisor with that domain expertise and they're willing to come onto your team and be in your pitch deck and make investors realize, wow, if you can convince that advisor to come on board, why shouldn't I take a risk in betting some money on you? Next, you want to do great things. So do great. And that's by showing that you are exceptional and that you can get traction. And I realize this can be quite difficult for a lot of founders because it's a chicken and egg scenario. You may be thinking, well, I need the funding to go get the traction, and now you're telling me I need traction to go get the funding. But doing great does not necessarily mean direct traction in your startup or necessarily revenue. I get it. Sometimes you need that funding to go out and make those sales. But investors want to know how exceptional, how great you can be without their funding. And if you have to find an alternative route, maybe shrink down the scope or go hand-to-hand combat, build another type of MVP that's more of a concierge, Wizard of Oz MVP, where you're doing things manual, then go do that. The founder that has tunnel vision is going to miss the bigger picture throughout the rest of the course of the startup. I know a lot of founders that are stuck in that tunnel vision, that echo chamber. They have a very myopic view of how to make their startup successful. Case in point, they make funding plan A. If I don't get funding, my startup's not going to be successful. Smart founders have plan B and C, and they go out and do it. For example, consulting. I've gone to investors and said, while I'm building the product, I've gone out and consulted and done what we set out to do, solve the problem manually, and look at my clients and look at what they're willing to pay me as I'm consulting, freelancing for them. What do you think is going to happen when I actually have a technical solution? My margins are going to get better. I'm going to use it in my consulting. And then eventually it's just going to sell itself and it's going to be a self-serve SaaS. Today, right now, during the AI evolution, investors flat out say that everything has been cheaper to develop. Things are so cheap, so founders don't have an excuse. You can easily go out and pay $20, $50 a month for one of these LLM platforms out there and create a custom GPT or another service and create a chatbot, or go to Replit or Lovable and just code an app. Vibe coding is there for you. Therefore, investors want to see you doing that and putting that in front of customers at least, so that you can demonstrate you're de-risking the investment by being upfront instead of being some of these founders out there that are building all these really cool solutions that don't solve a problem that anybody's willing to pay for or change their behavior for, and especially investors are not willing to fund. I heard from an investor, a VC who normally doesn't invest in pre-revenue startups. She was so impressed with a specific founder because he went and talked to literally 100 B2B potential clients and got them to agree to pricing even before the solution was built. I have founders who've done this at startups.com. With just a mock-up, they've gone and sold, and they put some fancy logos onto a sheet of paper and showed the investors and said, here we go. These companies are ready, and they're going to pay me this amount. That founder went out and raised $1 million, didn't have to raise any more money, turned down additional money, and got a $100 million line of credit from a bank, all before raising any funding to build a product. In the AI age right now, where there's this massive acceleration going on, it is amazing what can be built for virtually nothing. Founders right now don't have any excuse to be great and do great things to show that investor, and trust me, that'll put VC funding on easy mode. Now, I know the slogan is be great and do great things, but there's a third one that a lot of founders don't consider, and that is show great, or show up great is another way to look at it. And this is all about your executive presence, how you show up for VCs. There are many founders out there that are great and they're doing great things, but they don't show up very great at all. And that ruins the impression, and VCs just miss out on a great opportunity. This is even more important if you're early stage and you're just starting to get that traction. You need investors to believe in you and your potential. In a pre-seed round, investors are betting on the founders because they truly believe that those assumptions that you have in the beginning are probably going to be proven false, and you're going to have to iterate or pivot multiple times. And that's why VC wants to look at you and say, do I believe that this founder is going to be someone who can make those adjustments, who's adaptable, who's coachable, completely flexible, and who's got not just the technical skills, but like I said, those adaptive skills that you can move according to what the industry is giving you. You don't have that tunnel vision. You've got that open wide perspective, and you can make adjustments accordingly. I've seen founders completely butcher the pitch. Great startup, even have great traction, and they go and they present and they come off so wrong to investors. They're not the type of founders that investors are going to believe in. You're not sending the right signals. Think about all the pitch decks out there. I see them all. You send them to me on my channel, and there's so many times that I know it's a great startup and I know it's a great founder, but you can't communicate whatsoever, so an investor has no clue what you're actually building. Furthermore, investors want you to be that type of founder who can lead a unicorn company, that can go out and recruit A players, that can continue to staff a company and raise future rounds, building your team up to 30, maybe 300 if you plan on building a unicorn. And I know the teams are getting smaller, but the competition for talent is getting so much more fierce that you have to have the best presence. You have to be that type of founder, that CEO that everybody looks at and says, I want to work for that person. And that all comes down to showing up in your greatness. And so many founders don't take the time to take a look at themselves and say, hey, what can I learn about how I'm occurring to other people? I see this all day long. Every single week, multiple founders show up on Zoom calls. They show up on cohorts here at startups.com, and they just come across so amateur. And I say this with all the affection in my heart, because inside, I want them to come across great. I complain about founders being late to calls, or getting on a call and they're in their car, or they're dressed inappropriately. These are all things that investors look at. They have to, because they want to make sure everything lines up to make their bet on you, because you have a responsibility to take care of their investment with everything that you got. Every single tool in your personality, communication style, your wonderful sense of humor, your ability to lead, especially in emergency situations. All that becomes a factor in you showing up as great and making sure investors understand this is the easiest check that I'm ever going to write, because I love this founder. Not only are you great, doing great things, but you're showing up in a way that makes it very clear this is a bet that I want to take. One more time, yes, it is easier said than done. I get it. I empathize. I've sat on your side of the table. I've been that founder trying to learn all the skills, what it takes, getting the coaching, checking my blind spots, getting feedback all the time on how I can do all these three things so I have easier conversations with VCs. Adam Sandler just released Happy Gilmore 2, which is one of the greatest movies in the 1990s. That's when I think it came out. Yes, I'm old. But one of my favorite Adam Sandler movies was The Waterboy, and this character showed up all the time, and he would always say, "You can do it." Please forgive my impression, but that's how I want to encourage you. You can absolutely do it. But what should you do starting now? There are two things. The first thing you need to do is surround yourself with really great people. And this can be great founders, but also other people who are doing great things in other parts of their lives, maybe in different industries. What they say about you becoming the average of the 5 people or 10 people that you hang around the most is absolutely true. I'm always finding new people who are doing greater things than me to hang around with, to learn from, and I want to just sponge it up as much as possible. Let me give you a pro tip for life. being a founder is really difficult and it can be really lonely because how exceptional that you have to be pushes you to continue to grow, and you will lose friends along the way. I've lost some of my best friends because we can no longer relate because I am pushing my ambitions forward and they're deciding to stay where they are. And there's nothing wrong with that whatsoever. I love them to death. And if they ever ask me for anything, I would give them the shirt off my back. But they're not my friends anymore. I always look for communities where other founders are doing really great things. And I love hanging out with them because they show me how to be great. Greatness is caught, not taught. You have to immerse yourself. As you observe everyone, you are going to just be a part of that community. You're going to pick up that culture and you are going to move on to your greatness. After that, I want you to go research what VCs think are great. There's a difference between your perception of VCs and their perspective of you as a founder. And if you can't step out of yourself, out of your startup, and look at your venture with a critical eye and say, how would a VC look at my startup? What is their perspective on investing right now? You are never going to be able to make that connection with VCs whatsoever. In fact, I would challenge you to say you're never going to find an investor. If you are serious about VC funding, one of the things you can do is go to startups.com and go to investor matching right here. And you can upload your pitch deck for free and see what investors might match your funding round and what you're looking for. I did this with a founder that needs VC funding. They got this really cool electric vehicle. I uploaded their pitch deck and you can immediately see the investors that would fit. Here's a 100% fit. Now, this founder can go and research Climate Capital, this VC fund, and say, what are the standards that they need to see for me to prove that I am great and I'm doing really great things? You can go look at their previous investments and you can even see how you match with them according to your hypothesis and their investment thesis. Let me show you another startup. This startup handles resume fraud, and you can basically look and you can sort through all the different types of investors. Say you just want investors who are investing in the United States. That's totally possible with this system, and you can set all these filters and you can see. I've narrowed it down by a few hundred investors, and now we can save this and we can send the pitch, and the system will even suggest an email that you can then customize and personalize it to make your own, and you can track your opens and responses and how many people click on your pitch deck, which automatically gets embedded right into your outreach email. That tool you can use to show your initial investor contacts for absolutely free. You have nothing to lose. Use my videos and everything on my channel that I give for free to work on your pitch decks, and then upload that pitch deck and see what happens. Then you can research the investor and start to talk about it, especially with other founders who have VC experience, and say, I'm targeting this investor. What do you think? What advice would you give me? How should I continue to show up in my greatness as you continue to work all the way through in building more traction, developing a great product, talking to those customers, while also taking care of yourself. Don't forget your physical health, your mental health, get sleep, take care of yourself, and as I always say, stay hydrated. Watch some of these other videos that I'm putting on the screen right now, and I want to hear in the comments, what are you doing to be great, do great, and show up great? And let's have this ongoing conversation because I want to work with you and this community, and I look forward to sharing in your greatness. It's going to be absolutely fantastic. Remember, you can do it. Thanks for hanging out with me in this video. I'll see you in the next one.